Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, good morning.
Hi, good morning. Finally, after 24 days of conflict, we're seeing the first sign of de-escalation.
Yeah.
We'll have to see how that plays out, but at least there is some olive branch or a green signal.
Well, that's right. A glimmer of hope, and that's all what the markets need, right? We've been following just one way. Yesterday was a very rude trading session. And Mr. Trump decided post-market close that he has something to say, and not too bad in terms of a reason to see a bit of a relief rally. Things still very, very sketchy, but at least we have some bit of positive news, and hopefully there is some hope in terms of a breakthrough.
Indeed. So now Prashant has walked over to the big wall and he's going to take us through all the happenings over the last 12 hours and what it means for the Lal Street today. Prashant.
You know, I was standing right here yesterday at 3:20 p.m., guys, and we kind of put the 5% chance, 5% probability that Trump will basically, after what he did over the previous 72 hours, which is, saying that perhaps on Friday he's ready to wind down, and then Saturday going, full force, Delta force, that I'm going to do this and I'm going to do that. Was this just a pressure tactic to kind of back off a little bit? And that is exactly what has happened. Sometimes these things do play out. Now, the problem is that even though, and let's just put the first graphic up, right? And I'm calling it a headline roulette because that is basically what it is. You're watching this headline and that headline, and I mean, it's all a little bit confusing. But Trump essentially signaling a 5-day truce. But more importantly, what he's essentially said, the first part of that post, the Truth Social post, is we are in talks, constructive talks, which are going well to resolve the war. And to that end, I am directing the Department of War, which used to be called the Department of Defense, to halt all attacks on Iran for 5 days. So, so he may change his mind, right? As many people are saying, well, what's to stop him? And he's changed his mind before. I mean, these attacks on Iran happen in the middle of negotiations to begin with. So why should anyone trust him? And that's all fair. That's all absolutely fine. But the point is we live day to day in terms of incremental news. So the incremental news is this, and the markets are moving. I'll just get to markets in a bit, right? Now, the other reason why people are skeptical, this is of course the Iran response. So, immediately after President Trump's post, the Iranian speaker of the parliament came out and essentially said that, nothing of the sort, we'll achieve our objectives, etc. But later, Iran's foreign minister, first of all, denied that Iran was in talks with the US directly. But then he acknowledged that countries in the region were trying to get diplomacy going. And I think this is where we are at right now. So countries like Qatar, you look at what Oman's foreign minister has said. Oman's foreign minister, by the way, was in the room when those earlier negotiations were going on, and he was absolutely perplexed as to why the bombings began in the first place. There are talks that Turkey is involved, even Pakistan, for that matter. So, I mean, countries in the region and outside of it perhaps involved, but both talking to each other, to both sides separately at this point in time. Now, Arab officials, by the way, also confirmed it. There's a fair bit of reporting around it. And they're also saying that Iran has set a very high bar for ending hostilities, right? And this is the reason why people are not convinced that this is going to end anytime soon. Because and the question is pretty logical. Why should Iran stop now without inflicting more pain and cost for the global economy when, after midterms, it can be attacked again? Why should it stop without security guarantees, sanctions, etc., being lifted, etc., etc.? So, what Iran is ready to accept and offer and what US is ready to accept and offer, I mean, the gap, of course, is pretty wide. But as I said, perhaps the first step in terms of, it's always going to be one step forward, two steps back with regards to any kind of de-escalatory comments And I think we've seen the first. So let's hope that this really is the first, and we'll see more. Now, Israeli Prime Minister Netanyahu said that he basically, I just want to put this up because he's confirmed that President Trump, he spoke with President Trump about ending the war. British Prime Minister, by the way, also said that UK was aware of talks between Washington and Tehran. So just wanted to put this up that, you know, President Trump didn't sort of imagine these talks, which are absolutely non-existent. There are other countries who are also saying that, you know, something is going on. Now, oil prices, they fell 10%. They're back. I mean, I think this morning when I looked, they were at about just under 100. We're about back to about $104 odd or so. The S&P 1%, the Nasdaq 1.33%. The Russell 2000 was up about 2. I saw 10-year yields. By the way, the 2-year yield hit 4% and then came off and closed at about 3.85 or so last night. This is the equity picture. Gold prices, they paired losses. They were down 9% at one point. They closed about 3.5% lower. And so this is where we're at. Remember, you know, this is an actual hot war which is going on, and the proof of the pudding is going to be in its eating. So as the day goes on in Asia right now, people are going to be tracking whether the bombings are still going on, the attacks are still going on. And if the answer to those questions is yes, I mean, you know, markets are going to lose steam pretty quickly. So keep that in mind. And that's the reason why I said it's headline roulette more than anything else. The levels will come up on your screen. We closed at the lower end of the falling channel. The Nifty the channel support is 22,470. And the resistance is 22,800. If 22,800 is taken out, the next resistance is the swing high of 23,345 or so. So that's the picture. As I said, watch what actually happens on the ground along with the commentary for a better sense of where we are headed. The implied open is up on your screen. It's around the 22,900 level, which should be about, I think, 300 odd points higher from the futures close yesterday. The positioning and the layout there, Nigel has got that. Nigel, over to you.
All right, before that, let's just do a quick check on Asia, because what's happening is that the gains are dissipating. The Korean markets had opened up strong with a gain of 3.5%, now only up about 0.5%. Similarly, even for the Japanese market, it was up 2.5% at the session highs in the morning, and now the gains are just about 0.5%. Taiwan is actually down in the red. That's lost close to about 0.5%. Hang Seng is holding up, though, pretty smartly. That's up nearly 1%. So it's a mixed picture. There are gains that you can see across Hang Seng, Korea, the Japanese markets, but clearly not euphoric. What could be capping the gains is the fact that crude prices have once again risen. After going down to levels of $91 per barrel, we're now back at 94. So risk on. There's no risk on frenzy, but there is. Some of the markets are in the green, seeing a relief rally. But Nigel, what about the F&O action?
Well, confusion on the geopolitical front continues, with Trump tilting towards smoking the peace pipe. But as of now, Iran doesn't appear to be game to play ball. But today is likely to be more of a risk-on day. Crude prices, yields, dollar index, all of them have cooled off in comparison to what we ended yesterday with. So today, in all probability, it should be risk-on. But the bigger focus is where we end. And the bulls will hope that this kind of gap up that the GIFT 50 is suggesting, we actually close with some solid gains. For me, though, the big takeaway is crude oil prices may not get to that $130, $150 per barrel, which was earlier feared. Remember, on March 9th, we went to that mark of close around $120 per barrel mark. The Nifty in that session corrected by close around 400 points. But since then, crude hasn't revisited this mark of around $120, but the Nifty has been falling on fears of that surge in crude oil prices as well as heightened geopolitical tension. As we speak, crude is at around the $104 per barrel mark, but the Nifty has already pulled back considerably from the time we saw that $120 per barrel mark. So the hope is that that feared $130, $150 per barrel mark is not breached, in the times to come. On the flow side, the FIs continue to remain sellers. The DI buying, though, offset most of the FI selling. But going by the NSDL data, we are bracing for the highest ever monthly FI net sell number reported till date. Keep in mind, the NSDL data comes with a bit of a lag, so the FI net sell number is already approximately 1 lakh crore rupees in a single month. Today, hopefully, there will be some stability in the rupee as well, and that will be the important cue to track from the FI flow perspective as well. Moving to the futures and options space. Well, on index futures, FIs added close to around 3 short positions for every 1 long position. The FI shorts continue to hold at around 85%, while they also wrote close to around 8 calls for every 1 put. So there was aggressive call writing that we saw. And since today's weekly expiry, the call writers are around 22,500, 22,700. They'll be in trouble with this gap up. They could be forced to unwind the positions that we saw yesterday. These writers could be in trouble. The Nifty continues to remain in a range. The recent high, last week's high towards the end of the week, we saw that high of around 23,350. That'll be the first level of resistance. While the Liberation Day low at around 21,700, that is likely to be a very, very firm support. My gut is this Liberation Day low could hold out, and probably a large part of the correction could probably be in the price. Let's see how that goes. The India VIX, though, that's the worrying factor. It scaled to a couple of year high yesterday, but today it'll cool off to start, and you'll want it actually to gradually drift towards that 23 odd mark. Since crude oil prices have dropped overnight, you could see a bit of a trading bounce in various pockets, whether it's OMCs, InterGlobe Aviation, as well as Spain stocks. The GIFT 50 is suggesting a 350-point gap up. You'll want to end with this sort of gains, because otherwise the correction has been quite brutal.
Well, indeed, we've erased about 50 lakh crore in market capitalization in the last 24 days since the start of the conflict. Jahangir Aziz, head of emerging markets economic research, JP Morgan, is now joining in. Thank you very much for joining in. How would you read the reversal from Donald Trump? Are we getting ahead of ourselves, or do you think this is the start of the end?
Look, I mean, that has been the market belief for a while, right? So that given the midterm elections, etc., and the political needs, if the economy or the financial market before the economy reacts badly through inflation, obviously, that the president would be scaling back. The question has always been that even if the U.S. scales back, would Iran follow suit in basically letting safe passage through Hormuz? And that's always been the question. I think the 5-day negotiating timeline that has been put forward, let's see how that turns out to be the case. You yourself were talking about how the market really moved up at the beginning of the trading day, and then by the end of the trading day, you saw things quieten down a bit. If you look at calls, if you look at puts, they didn't really move very much, not anywhere close to what a news like this would have actually most likely would have entailed.
Yeah. So skepticism, right, Jahangir, in that sense. Absolutely that's the case. So fog of war, whatever you want to call it, and no clarity yet. So oil, at the end, for financial markets, there is the cost is coming through from energy prices and oil and everything which comes out of oil, that's the trajectory seems to be a lot higher for a lot longer. Jahangir, is that correct? What's the base now for you?
Yes, so we don't really have, I mean, there's too much uncertainty to talk about a baseline, right? I mean, Friday there would have been one baseline, and then Monday we would have to turn to another baseline if we were going by changing forecasts. So I think here is the arithmetic that we are working with, right? The arithmetic is the following, that there are 60 million barrels a day that goes through the Hormuz Straits, of which mitigation, for example, with reserves from OECD, reserves from China, reserves from Indonesia, Malaysia, and other small countries, plus additional flow through the pipeline from Saudi Arabia to the Red Sea, all of that can sort of take down another 6 million barrels. So if Hormuz remains closed, then there is a $10 million barrels a day gap between supply and demand. And this is the near-term arithmetic. And if you look at oil prices, let's take 100 was the average between Friday and today, Brent prices, that isn't really reflective of this 10 million barrel shortage. What is reflective probably of that shortage is what is priced in Dubai and Oman, which is clearly much higher. So life will be somewhere in between the two of them in the event we end up with a $10 million barrel shortage. And that's where I think the uncertainty is. How wide is the range? Where does it fall? And I think that's what we're grappling with. So that's the first part. The second part of the argument is that Let's assume that the war comes to an end. Let's say that we go back to Hormuz being opened. But even then, given the shock and the disruption that has been caused in the months or in even the years following, I think almost every country is going to increase their amount of reserves so that future prices will not only reflect the current supply and demand, but also this additional demand of increasing reserves. I think that is going to be the case for almost everyone.
Hi, Jahangir. Good morning and good to see you. Ben, what about the Indian rupee? That showed some signs of stability at around the 92, 93 odd mark, and now it's pulling very, very swiftly towards the 95 mark. There are fears with regard to the flows not coming in. The deficit number could be a little bit larger, and maybe economic growth does slow down as well. But do you think it's extended itself a little bit too much or, on the downside, and there should be some stability, some reason to pull back from here?
Look, I've always made the argument that if you look at the actual current account deficit, even if you add the current oil prices and the added current account deficit, India in the past would very comfortably fund that current account deficit. It used to be 1% before this oil price shock. Maybe it's gone up to 1.5%. Who knows? But let's say it's 1.5% point. If 1.5 percentage points of GDP was the current account deficit in any year, most of us would say that was a very, very good year. The problem is that even with this low current account deficit, India's unable to fund it even before this oil price shock happened. So clearly, if you're just looking at flows, if you look at current account, the usual driver of the rupee, you will shrug your shoulders and say, yeah, all of this is overdone. But then the question is, what's really happening at the capital account? And I think much less is being focused on the capital account than we should be focusing on. And a particular aspect of the capital account is the fact that foreign direct investment has been skating water. And that's really where the problem is. It's not so much that, portfolio inflows are not coming in. If you have interest rate differentials of this kind, portfolio inflows won't come in. We know that. It's really where the foreign direct investment is skating water. That's where the problem is.
So how do you model the macros, Jahangir, in such a situation? As you said, right, the key question is whether Iran will follow through and open the Strait of Hormuz. Israel and Iran have been fighting now for 47 years. Even Israel has to yield and accept. So how does one go ahead? What are the base cases? What are the assumptions that you are making when you model?
So when you model it, look, regional conflicts, however, detrimental it is to the region, are almost always regional conflicts, unless there is a global variable that connects the world. And in this case, it is clearly oil. So oil is the driver. As I was saying, that even if we do get a resolution, yes, there's going to be a short term. There's going to be a drop in oil prices simply because there is many tankers sitting waiting to move out of the straits. But in a medium-term basis, I think the $60 oil that we were looking for, based on just supply and demand, I think that just gets pushed up. So we have this factor of oil demand. And then, as you talked about, there is a growth destruction. And we haven't seen that growth destruction as yet. We've seen little bits of that happening. Market clearly is right now pricing in only inflation spike. Look at the movements in the short-end rates. No one is really focusing on the growth impact. Obviously, if the conflict lasts, if we get a sustained spike in inflation, there will be the growth impact that's coming through. In the case of India, I think, you've heard me many times talking about how much of India's growth is driven by what happens to whole WPI. And WPI literally is driven by crude oil. This time around, unlike the previous 2 years when crude price was on the slide and it boosted growth up, I think 2Q growth in India is going to take a tumble simply because of the same statistical problem that we've seen over the last 2 years, because WPI is going to rise.
Yeah. Jahangir, we leave it there. And I think It's just crazy amount of news and headlines, right? I mean, as someone said, and I just go back to that, thinking about that line that someone said, well, human beings are not built to track this amount of news flow, right? And just sheer dissonance hitting you from all sides. And you're supposed to sort of react and comment on it or whatever. I mean, it's just crazy, absolutely crazy. But it's been like that for a while. Thank you very much for being here and appreciate your time here as always. Well, I'll just quickly run you through the interactions lined up on the program today. So coming up at 8:35, we have Sandeep Parekh of FinSec Law Advisors to discuss SEBI's board meet outcomes. 9 o'clock, we'll be joined by Jonathan Barat of ETO Markets. Oil is in focus once again. Tahir Badshah joins us at 9:20 with Invesco Mutual Fund. He's a market master of the day. 9:35, NLC India management joins us on FY27 Outlook and beyond. Management of Titagarh Rail Systems. You'll hear from them at 9:45 on the business outlook. And Lata in conversation on the impact of Iran war and US macros with David Merkel of Goldman Sachs. So that's a big global face you will hear at 10:15 or so.
All right, time for a short break. But when you come back, we'll go full tilt on the stocks that we'll be tracking for you today in our special Top 10 segment. We're looking at OMCs, CGDs, city gas distribution companies, that is, tire stocks, auto ancillary stocks, InterGlobe Aviation, all of them will be doing well. So they'll open up in the green. Exporters, Asian Paints, Coal India, IRFC, and Tata Power. All of them will be reacting favorably to the news flow. Take that break. You come back. We get into further detail on all of these names.
Welcome back. Let's talk stocks now. Our research team is standing by with CNBC-TV18's list of top stocks for the day. We'll track the gyrating move seen in crude prices. From a high of 115, we went down to levels of sub-100. The low was 91.7 and now back again. How should oil and gas companies move? Sonal now joins in with her analysis. Sonal.
Well, you know, there's been a lot of volatility in crude oil prices as well. The talks around de-escalation that led to crude oil prices fall sharply below that $100 per barrel mark. But then again, things changed. There was a statement coming in from Iran as well, and that's when the prices jumped back to levels of $103 per barrel. But still, it is a relief from the levels that we saw yesterday, right? Additionally, we did see gas prices fall overnight as well. And we do know that there are two LPG tankers carrying 92,612 tons of LPG passing through the Strait of Hormuz to come to India. So that means there could be more supply of LPG, which has been an issue in the country so far. So this is some positive sentiment that has come by, and considering that it impacted oil and gas space the most, expect some relief in these stocks today as well.
Okay, all right. Thanks a lot for that, Sonal. Well, hopping across to Sudarshan. He's tracking a few more companies, tire stocks, auto ancillaries, as well as InterGlobe. Morning, Sud.
Good morning, Niall. So all the companies which are dependent on crude derivatives might see a relief rally today and tracking the fall in the crude prices that we have seen overnight, while in the morning trade, crude is sharply off lows and currently trading around $104 per barrel. So I've just taken some of the major input costs. So starting with the auto companies, steel forms almost 50 to 55% of the overall cost, and trend in the last few weeks, as far as steel price is concerned, it's been largely stable, and it's the same for aluminum and copper. Freight costs have increased, and that forms almost 3 to 5% of the total cost. And also rupee depreciation also is going to be an overhang for the auto companies because of the dollar denominated cost increase because of the rupee depreciation. Coming to tire companies, natural rubber forms 30 to 35% of total cost, and price in the last 2 months has seen an increase of 10%, and synthetic rubber forms 10% of the cost, and that also has seen an increase mainly because of an increase in the crude price. Last is airlines. All the costs for the airline companies have seen an increase, whether you talk about ATF, aircraft lease, insurance, or the crew cost. Everything has seen an increase. But for today, I'm going with the green because of the fall in the crude price.
Thank you very much for that. Over to Ria now. She's tracking some exporters.
Well, yes, good morning. Exporters will be in focus today since the government has restored the full export incentives under the remission of duties and taxes on exported products scheme amid the ongoing conflict in West Asia. Now, remember, last month the government had halved the rate of duty benefits, but now they have said that full benefits will be restored with effect from the 23rd of Feb up until March 31st for all eligible export products. Now, it is to be ascertained going forward what will happen post the 31st of March. But for now, this is a positive development for all of these companies, and exporters will see reduced tax burden as a result of this.
Okay, got it. Thanks a lot for that, Ria. We'll hop you across to Upasa. There's some positive news flow on both Coal India as well as IRFC. Upasa, take it away.
Good morning. First up, let me start with Coal India. It has received in-principle approval for divestment of up to 25% stake in southeastern coal fields via OFS, and in addition, there'll be an issue of 10% equity shares of SECL via IPO is what the company has indicated. Next up is IRFC. It has signed a loan agreement worth 12,842 crores with HURL for refinancing of the long-term debt. So all in all, these two stocks will remain on our radar today.
Thank you very much for that. Manglam now joins in. Manglam, Asian Paints has effected a price hike.
That is correct. So last week we had a bunch of other companies announce 2 to 3% sort of price hikes. Asian Paints had gone ahead and announced a price hike in 2 phases on April 10th and April 21st. The quantum is between 6 to 8%, and this is on account of the ongoing geopolitical uncertainty, the increase in packaging costs and increase in the cost of crude as well as logistics. So all these factors, the smart thing here is that a lot of the premium products have been, the price hikes have been effected from April 10th, and a lot of the volume drivers and some of their fringe products like adhesives, etc., waterproofing, etc., have been on April 21st. So what this means is that they get the maximum benefit of a price hike on their premium portfolio and the maximum benefit of volumes by, in delaying the price hike on those volume drivers as well. So this balance is fairly good. Importantly, the decline in crude prices from highs yesterday would be a further tailwind. So let's see how this pans out. April 10th is where the companies announced price hikes from. The other parts of the industry have done 2 to 3% with a promise of increase later. So Asian Paints, instead of doing 2 to 3% twice, they've done 6 to 8% just once. See green on that stock.
Got it. Okay, all right. Thanks a lot for that, Manglam. Going back to Vivek. Vivek, Tata Power, positive news flow?
Well, that's right, positive news flow. Remember, the company had earlier intimated the exchanges that they had reached an agreement with the Gujarat state government for signing a supplementary PPA to supply power from the Mundra power plant. So today there has been an update saying that the company has gone ahead and executed the supplementary PPA with GUVNL. Now, along with that, the company has also told the exchanges that the company is going to go ahead and execute similar supplementary PPAs with the other states. So there are 4 other states: Maharashtra, Rajasthan, Punjab as well as Haryana. Just to give some perspective, 50% of the power offtake from Mundra goes into the state of Gujarat, and the remainder 50% goes into the 4 other states. So this is a positive development. Remember, the company made close to 1,000 crore loss on the bottom line due to non-operational of Mundra power plant. So this definitely is positive as far as Tata Power is concerned.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are oil. All the companies which will benefit from the decline in crude prices versus yesterday's level. So oil marketing companies, CGD, tire stocks, auto ancillary, InterGlobe Aviation, exporters, Asian Paints, Coal India, IRFC, Tata Power, all these stocks could open up in the green. We don't have any stocks, at least based on news, which is likely to open up in the red. But now let's talk about commodities and currency. Manisha now joins in for a complete roundup.
Well, thank you so much for that. I'll start with the crude oil prices, where it continues to be a very, very volatile market when you look at last 12 or 14 hours. We did see crude oil prices trading at 113 same time yesterday. It's trading at 103 at this point in time, with 4% of gains coming in. The U.S. president saying that he's postponed attacks on Iran energy infrastructure by 5 days is what the markets have reacted to, while, of course, there are various theories going around that the prices started to correct even before that. Well, Saudi Arabia and UAE taking a step towards joining the Iran war as per various reports is something that the street will watch out for in various details. But interestingly, even as when you look at the U.S. crude oil prices, they are trading at $92 a barrel as of today. But when you look at the August futures, that is trading at $80 a barrel. So it's trading in a backwardation right now, with the markets believing that once the dust settles, you could perhaps be looking at weaker crude oil prices going forward. Having said that, when you look at the metal prices, well, some bit of a support coming in here as well. Copper is trading a percentage point higher. Gold prices, after hitting $4,100 an ounce yesterday, are trading at $4,350. Same goes for silver as well. After hitting $60 an ounce yesterday, it's trading at $68 an ounce at this point in time. Of course, for the month of March, it's very sharply in the negative, but some support in Asia has continued today.
Yeah. Manisha, thank you very much for that. So there is, of course, oil in focus. By the way, there are also reports coming in that a large U.S. refinery in the U.S. has seen, unrelated to the war in Iran, etc., but this is an onshore refinery in the U.S., which has seen an explosion. We don't know the scale, the damage, etc., but apparently it's a very large one. So, that news comes perhaps at the worst possible time when supplies are anyway tight. So that's on the refined product side. It's the refinery. So we'll keep a track of that as well, whether that is likely to have any impact whatsoever. 103, 103.5 or so is where Brent is trading at right now. We'll take a break. Sandeep Parekh of FinSec Law Advisors on the SEBI board meet outcomes. Stay tuned. Coming up.
Welcome back. You're tuned into Bazaar Morning Call, and for starters, it's appearing to be a better morning today because the GIFT 50 is suggesting at least some green. Well, one big stock that will be in focus will be HDFC Bank. So Sudarshan joins us with some bit of the news flow that we got in, as well as it's been a volume buzzer. Sud?
So the fall in HDFC Bank is important because mainly its weightage in both Nifty and the Nifty Bank. Though as far as the stock is concerned, it's at 52-week low. It's amongst the, if you take a look at all the Nifty stocks, it has fallen the most. It's in the top 5, and it's down 12% in the last 4 sessions. And if you talk about the valuations, currently price to book value for FY27 is 1.8 times, much below the 5-year average, that is 2.7 times. And the fall started after the news flow that started on March 18. Late night on March 18, we got the news of Atanu Chakrabarti, who was part-time chairman and the independent director. He tendered his resignation. But the most important part was the reasoning of the resignation that he has given. He said certain practices not in congruence with the personal values and ethics in the last 2 years that he held that post. And after that, K.K. Mistry was appointed part-time chairman, and that was approved by RBI for next 3 months. Next day on March 19, HDFC Bank CEO spoke to CNBC-TV18, and he said there was no friction between him and Atanu Chakrabarti, and he tried persuading him to remove some of the contentious lines, and those lines have caused a little bit of stir among stakeholders and the investors. As far as the bank is concerned, he said foundation of the company remains intact. Now today the latest update has come that HDFC Bank has appointed external law firms to review Atanu Chakrabarti's resignation letter and law firms to provide report within a reasonable period of time. Now, if you talk about delivery and volumes of the stock, so stock has been falling with healthy delivery volumes. So yesterday also, delivery percentage was at 61% versus 1 month average of 58%. If you talk about the derivative data, we continue to see long unwinding, and volumes of last 3 sessions have been the highest that we have seen in last 6 months.
Thank you very much for that. In fact, yesterday, post the SEBI board meeting, Tuhin Kanta Pandey was also asked about this particular issue. And what he said is that independent directors are required to adhere to a certain code of conduct. If there are certain concerns independent directors have, then it should be recorded in the minutes of the board meeting. Listen in to those comments because they come specifically for HDFC Bank.
Vote for IDs under Schedule I-4, where IDs are required to adhere to a certain code of conduct. And IDs have, where they have, in this code, it's written that where the IDs have any concerns about the running of the company or a proposed action, ensure that they are addressed by the board, and to that extent that they are not resolved, insist that their concerns are recorded in the minutes of the board meeting.
Absolutely. And, SEBI has eased the norms for FPI transactions, permitting the net settlement of funds for transactions by FPIs. Just want to play out, SEBI Chairman Tuhin Kanta Pandey on this particular issue as well.
Currently, FPIs settle their transactions with custodians on a gross basis, which results in additional costs for FPIs, including funding costs and foreign exchange slippages. Recognizing these concerns and with a view to enhancing operational efficiency and reducing cost of funding for FPIs, it has been decided to permit net settlement of funds for outright transactions done by FPIs in cash market. And what are these outright transactions? That is transactions in which there is either purchase or sale transactions, but not both in a particular security in a settlement cycle.
Sandeep Parekh, Managing Partner, FinSec Law Advisors, is now joining in. Sandeep, there is this one, the comments that he made on HDFC Bank, which we played earlier, and the second one is the net settlement for FPIs. Now, it seems like a market-friendly move, especially on high-volume, volatile days, like your index expiry, rebalancing, etc. How significant is this move for FPIs, this net settlement?
I think it's a significant move, really, in terms of because money has a cost attached to it, and I think one day, if you're looking at thousands of crores, it is a big number even for one day. So it really makes the entire process more efficient. At the same time, it doesn't increase risk to the system because there is a sale transaction of in stock A and a purchase transaction in stock B. So subject to the sale getting executed, there is no requirement if it's the same amount. There's no requirement to put up that money because you're expected to get money. So it will bring in a lot of efficiencies for the FII. So it's kind of a net benefit without kind of additional risks being introduced to the system. So I think it's a great move.
Okay, and on HDFC Bank, separate, there's one part about what Tuhin Kanta Pandey said, that if there are any concerns, independent directors have voiced them, recorded in the board meeting. But separately, the bank has also intimated to the exchanges that they've appointed external law firms to review the letter of the chairman. What exactly what exactly do you think the lawyers will be able to help in this particular situation? What does review the letter really mean?
No, I'm not commenting on HDFC Bank because I sit on the board, so
all right,
I won't comment on that.
Sure.
Sandeep, just to go back to the first point, that net settlement point, morning Prashant here. So you're saying that you don't have to wait for the money to come into your account for you to be able to do the next leg of transaction. You sold something.
That's right.
And you can do it immediately. That's what it means after execution?
That's what it means. I think the original restriction came as a consequence of not allowing intraday transactions, that you don't want FPIs to come to the market and punt.
Yeah.
But there's frequent rebalancing that is required. So, if, for instance, if they're following an index, they remove something from their holding and buy on the same date. It has to be the same date. And that adds the cost of getting in funds which are not required, right? So instead of 100 crores required to purchase and net zero required, ultimately you saving that float of 100 crores for one day. So I think it brings in a lot of efficiencies for the FPI.
That's true. But that efficiency, is it available for local investors, you and me, Sandeep? No, right?
Yes, it is. It is available. It is available.
I think there is some percentage you can sell. You sell, say, 100 rupees worth. You're able to use some 50 rupees, 60 rupees worth of stock, right? And the rest comes in, T+1, T+2, depending on what stock it is.
No, for retail as well, as soon as kind of you sell something, you get credit. Again, may depend from broker to broker. But most brokers do provide, the exposure of the amount that you sold because it's guaranteed payment, right? The clearing corporation is guaranteeing every trade, so there's no chance of failure. So, yeah.
Yeah. Okay. Fair enough. And maybe it's a broker to broker kind of thing. The other point on this net settlement business, Sandeep, is there has been. And I was told this, that there is worry around what's happening with all these high-frequency algo, the J and Jump, Citadel kind of institutions in the market, and what they did. There's a SEBI order which Anand Narayan had passed before he sort of retired. Will this incentivize and make it easier for those firms to operate? Because they are in and out 1,000 times a day, right? So if you're saying now that you don't have to bring in fresh capital, every time you sell, you can use that amount for the next leg of transaction. So does that work
No.
Yeah.
No, so it doesn't help them really, because this is really not intraday transactions, which FPIs are not supposed to do, right? So it can be another entity which does intraday, but usually, it's usually a local entity which does intraday, because FPIs are not allowed. So this will really only help people who are actually doing delivery trades, and they need rebalancing their portfolio. So it's not meant for intraday trades in a single stock.
I see. I see. So this is only for cash market, not for futures and options.
That's right.
Yeah.
Cash market also, remember, it's not applicable to intraday trade of stock A. It's only when you buy A and you sell B is when it's the benefits really percolate.
I see. Anything else out of that board meet, Sandeep, which caught your eye?
So I think, So I think the other thing is, I think the code of conduct has been implemented, which is, I think, quite a, I would say quite a bold and needed change in the way, SEBI looks at its own internal governance. So I think it's a very important signal to the market that all the issues which happened in the last regime would get cleared up, more transparency, more accountability. So I think it's a great move. And I think the third thing is the fit and proper guidelines which have been amended, which essentially say that, till the time you're convicted, we'll hold you not guilty of a crime, right? So all the bars from acting as an intermediary, etc., only apply if you're either debarred by a regulator or there's a formal conviction. And I think that's a fundamental rule of law, that you're only liable if you're held guilty by somebody, and not before that. So the question of FIR and charge sheet causing an intermediary not to be able to register, not to be able to do business has been done away. It's a great move, I think, in my view, because everybody is considered to be innocent till they're proven guilty.
Got it. All right, Sandeep, appreciate you joining in and giving us your quick take. We look forward to chatting up with you in the coming days as well. Thanks a lot for joining in. Well, let's welcome Mayuresh Joshi, Director Research, Mark Smith, India, who joins us on the show. Hi, Mayuresh. Good morning and good to see you. It's going to be an interesting trading session. Crude oil prices have cooled off, at least from yesterday's high. They're perking up a little bit right now. But what's your view, particularly on a frontline name like InterGlobe Aviation? One would think that, this one has corrected a large deal from the top. And near term, there are headwinds, no doubt, in terms of capacity, in terms of ATF price hikes. However, it's the market leader. And it's, valuation-wise, it's at least a little bit more palatable. Your take?
Morning, Nigel. Yes, a sense of relief, at least for today, in terms of what is happening with crude and global markets, as well. Asian markets have probably opened far higher with the news flow coming through. For InterGlobe in particular, you're absolutely right. I think there are headwinds and there is a tailwind as well. If crude cools off, a large component for aviation companies, almost 45% of their input cost is determined by the ATF prices. And therefore, if crude cools off, based on all the events unfolding over the next few days, I think that will be a confidence booster, because as input costs will go lower, the expectation in terms of better stability in terms of numbers should largely get played out. Secondly, I think in terms of all the issues that the stock was probably facing over the last few months, and the regulatory penalties and fines as well, the expectations in terms of as the escalation probably comes down, and if that happens, I think the routes that will probably open up specifically to Europe and the Middle East, which are more profitable routes compared to the domestic routes, I think that can start adding in terms of EBITDA contribution as well. And therefore, all the key parameters for aviation companies in terms of available seat kilometers, the revenue per seat kilometer, should largely start improving. But there are a lot of ifs and buts, Nigel, attached with it. Therefore, I think taking a call in terms of holding it in your portfolios or adding it in your portfolios from a long-term perspective, we still will like to wait and watch. From a swing perspective, yes, I think that can be a tactical.
Yeah, got that. Mayuresh, morning, and that's something to track. Just a quick word, Mayuresh, on the levels itself. That if you have any thoughts, the Liberation Day low was about 21,800, 21,743 to be precise. This morning we'll start a little higher at about 22,800 or so, if the GIFT Nifty is correct. Just your assessment of this entire thing, if there is a way to do it. Or you think, the better thing to do is, start to pick up things you like at sensible prices, as we've discussed in the past as well. Mayuresh, what's your feeling?
Good morning, Prashant. I think levels can be broken down based on the news flow that can probably come to effect. To define a level probably becomes an impossible task. However, I think if the headline index corrects further, say another 4-5%, I'm not saying that it will, but if it does, I think the forward multiples will then start factoring in earnings growth of around 10 to 11%, assuming that the escalation continues and the second order effects in terms of inflation, growth dynamics going lower, etc. start playing out, and earnings recovery probably gets delayed and pushed back to H2. So I think it will become attractive levels. And therefore, I think certain sectors which are probably holding up relatively stronger compared to the rest of the pack at this juncture. Sectors like pharma, as an example, sectors like energy, and with energy, I think select power themes can continue doing well. And therefore, I think your positioning should be that you should start gradually entering these stocks within the sectors itself, because here I think the earnings growth will remain reasonably strong. The second element, Prashant, is that you never know. If the de-escalation happens faster than one probably thinks and on the right track, staying underinvested in these markets might mean that you will probably miss out on the first leg. We're okay with that, because I think what will probably happen is that you'll still get your chances, but at least there is some element of surety that I think the worst is probably behind that, and there is some element to look forward to in terms of sectors probably doing.
Yeah, no, got that. What we'll do is we'll take a break. There's, by the way, an order for Kalpataru. Kalpataru has received an order for about 4,400 crores for their transmission and distribution business. We'll try and speak with the management a little later on the program as well. Take that break. Mayuresh, of course, is with us. We'll also connect with Sudeep Shah of SBI Securities and Mitesh Thakkar for technical trading ideas. So that's coming up.
Welcome back. In conversation with Mayuresh Joshi of MarketSmith India. Mayuresh, we were just discussing HDFC Bank. So Sudarshan was telling us that how the stock has corrected 12% in the last 4 trading sessions. Valuations are now at 1.8 times versus a 5-year average of 2.7 times. There is more news flow. The company has proactively hired an external law firm to understand and review the situation surrounding the chairman. What are you all advising from an investment point of view?
Morning, Rima. No, I think two things. One, I think in terms of the price performance over a longer period of time, it is where it was 5 years back. Obviously, I think the regulatory developments and the issues that have now surrounded the bank over the last few days, the valuations, in no other words, have become very, very attractive, both on a standalone basis and even if you add the subsidiary component to it. Valuations still remain very, very attractive on a consolidated basis. However, like we've seen in the past, where corporate governance issues and allied issues probably start creeping in for banks, the confidence to come back from an investor perspective takes time. The second element in terms of the core banking performance itself, my own sense is for larger banks with larger deposit bases and larger balance sheets, how is the deposit accretion going to come about? Is something to be looked out for, because clearly, I think if deposit growth lags the overall headline number that we've seen in the past, the entire scenario in terms of how numbers will play out over the next few quarters start dwindling a tad bit. And therefore, I think credit deposit ratios might start coming off. You might have better showing in terms of NIM, asset quality, etc. However, I think from a core performance perspective, I would still like to track, at least for the larger banks on the private space, how deposit accretion is probably happening. So you'll get your incremental bounces as the market probably bounces back. But is there going to be a steady state recovery going forward? We'll still wait and watch. So as I've discussed in the past, I think something like an SBI from the public sector space, if it pulls back, I think this is one stock that we'll keenly keep on a radar to probably add on declines.
Okay, all right, got that. So add the stock on decline. What about tech, Mayuresh? Yesterday that was actually the outperformer for majority of the trading session. Towards the end, there was big selling that suddenly crept in. So I think that index as well went on with a bit of a cut. But it was relatively outperforming. Even if I look at it, month to date, the tech index actually has done relatively better. What's your view on tech and what do you like from there?
So Nigel, again, I think looking at the markets and the way they are reacting in terms of news flow, it does become a defensive bet of sorts. However, our own sense is that the kind of disruptions that AI is probably creating at this juncture and how the companies are probably gearing up in terms of organic growth as far as AI is concerned, it's still a long, long way to go. And therefore, I think at Markets with India, I think our take has been that we'll keenly watch out for Q4 numbers. What we are also looking at the global scale, as far as the US and the European markets are concerned, we are also keeping a close watch in terms of the announcement that all these hyperscalers have probably done in terms of their capex plans, and therefore how numbers will play out from a Q1 perspective. So both from a global as well as the domestic perspective, we are keenly watching out for Q4/Q1 numbers, which will give us a fair idea in terms of how the entire sector and the industry is moving. Management commentaries across domains, across various companies will also give us a fair idea in terms of the outlook for the sector over the next 4 to 8 quarters. So I think we'd wait and watch both on the local and the global scale for this quarter's numbers to come.
Right, Mayuresh, we'll talk again. Thank you very much for this morning's conversation. Appreciate it. And let's hope that some of the gains last as we start up. We'll take a break. We're back. We'll get you some technical trading ideas. Midesh is going to be with us. Sudeep is going to be with us as well. And we'll also have Jonathan Barat of ETO Markets to put the spotlight on oil prices. So stay tuned. Coming up. Welcome back. I think we are hitting market pre-open in about a minute or so. The market opened still about 15, 16 minutes out. Well, in the wake of Atanu Chakrabarty's resignation as the part-time chairman and independent director, HDFC Bank has appointed external law firms to review his resignation letter. Shireen is now joining in with more details on the story. Shireen, good morning. Take it away.
Good morning. This is really an attempt to find closure in this matter, is what I'm given to understand, and quell the uncertainty that Atanu Chakrabarty's resignation has raised. So essentially what has been done is that law firms have been appointed, and the reason why it's law firms is because HDFC is, of course, the ADR is also listed, and it is, of course, listed here. So I would imagine that there are two aspects that are being looked at this point in time. Now, what is this law firm essentially going to do? It is going to review whether there is need for any strengthening of the governance processes. It's going to be a reflection and an assessment of HDFC Bank's internal processes. I would imagine, since Atanu Chakrabarty's resignation letter did not highlight any specific instances of the incongruence that he talked about when he put in his resignation letter, this is essentially going to perhaps go over minutes of the board meetings and so on and so forth to review whether there were any concerns raised, how those concerns were addressed, and essentially recommend to the board any ways of strengthening internal processes and so on and so forth. There is no timeline that has been specified as of now, but I would imagine that this is going to be an exercise that the bank would want to close as quickly and as early as possible. So the appointment of external law firms is a proactive measure that's been taken by the bank. It will independently look at the aspects that have been mentioned in the resignation letter. The aim is to ensure an objective and fact-based assessment of what has transpired. And the idea is to ensure that this is a measure and a step to benchmark HDFC Bank with the highest governance standards. That's essentially the plan at this point in time.
All right, I think the stock is up about 2% as the pre-open is kicking off. Shireen, thank you very much for that. That's helpful and important to take note of. Well, 759, 760 is where the stock is opening up at this point. Things will settle about 5-6 minutes in, and you'll get a better sense. But I think it's important also to look at the Nifty, the pre-open, right at the word go. The Rupee should come up. It's at the bottom of the screen. So it's a 30-odd paisa strengthening in the Rupee. So it's been one way, very fast. And you're saying you're going the other way a little bit. So 93.64 compared to 93.98. So some relief for the currency. And let's just look at the Nifty as well, because both are, of course, related. 1.6 higher, so that's about 400 points up in the initial first rates as far as the pre-open goes. 22,873 is the Nifty pre-open. Let's just put the Nifty Bank pre-open rates on the screen. Yeah, let's just keep those up at the bottom because that is going to be useful in that sense. 1,600 points on the sensex as well. Sudeep Shah of SBI Securities and Mitesh Thakur of Bonanza Portfolio are with us with what they'd want you to do in terms of trade. Gentlemen, good morning. Good to have both of you here. Mitesh, you go first. How are things starting up? And, is this a gap up to be faded or to be trusted?
Morning, Prashant. So I think, while there's a good gap of about 350, 400 points, I think the most important test will happen if the Nifty were to face yesterday's gap down. So till that gap is filled, which means that 5 days low of 23,114 is captured. I think, I'll be slightly, not very comfortable with going aggressively long. I think let's fill the first gaps. Believe that there was some exhaustion gap, and exhaustion gap gets typically filled in about 3 to 5 days. So if that happens, then maybe we'll turn the short-term view on the positive side. Till then, I think I'll still hold my horses. Though on stock-specific basis, you can have some longs and stocks which are oversold, reversing from support levels can still be traded. But on the index, a good reversal will come only if we start getting past 23,120.
23,120. That's the important mark. Got that, Mitesh. Thanks for that. Sudeep, what about you? How are you feeling about this morning? Green after a while, and it could be bright. But is this a shorting opportunity?
Good morning, Nigel. It's really good to see green at the opening for a while, but how long it sustains is very important. And I agree with what Mitesh says that 23,100, 23,150 are on my radar also, these levels. Because unless and until these levels are captured, there could be sudden bouts of selling pressure from higher levels, and we are not yet out of the woods. So what I feel is that the range has become a bit bigger, and so is the volatility. So 22,600, 22,700 on the downside would act as a strong support, while any signs of, say, positional bullishness should only be taken once Nifty crosses and closes about 23,100, 23,150 band.
Got it. So we have a consensus here, 23,100, 23,150. Both our technical experts suggest that's the next barrier. Mitesh, has come across to you. Give us some trading ideas today.
So Nigel, an all-buy list, especially from IT, which would benefit from rupee depreciation, and oil refining, which would, benefit from crude oil prices coming down. So BPCL is the first stock on the list. Buy here with the stop loss placed below 266 for a target of 285 to about 288. HCL Tech, it was a call in yesterday's closing bell as well. That's a buy with a stop at 1344 for targets of around 1390. ABB is something, which has actually maintained its uptrend in this entire decline and now is at about 34 exponential average. So that could bounce back very well. So buy here with the stop at 6,004 for targets of 6150. And another stock which has maintained its uptrend in this falling or declining market is Coal India. That's a buy with a stop at 449.5 for target of 468.
Okay, got it. Sudeep, what about you? What are your trades?
Prashant, limited buys, as I'm not too sure about the trend between 22,500 and 23,100. So there are two stocks which have by far outperformed the markets and have held well even in the intermediate fall when the mid cap as well as the broader markets have corrected. So the first one on the buy list would be Cummins India. Now, if you see Cummins, it's in a medium to long-term uptrend. There was some kind of a profit booking move from 5,000 almost till 4,400. And yesterday we have seen some kind of a support zone closer to 4,400, 4,450, which was the prior breakout zone also there being formed. So what we feel is that Cummins can be bought with 4,400 stop loss on the downside for a target of 4,650, 4,700. The second stock that we like is from the pharma space, that is JB Chemicals and Pharma. So that also is in an uptrend on the weekly as well as in the monthly charts. And yesterday, some sort of a profit booking move had happened. But despite that profit booking move, the intermediate, the swing lows of 2050, 2060, which is the 20-day exponential moving average, also was held well. So we feel that this can be bought with a stop loss at 2060 on the downside for a target of 2140 and 2170 on the upside.
Okay, I got that. Sudeep, thank you very much. Mitesh, thank you very much. We'll speak again. Appreciate your time here for now. Well, oil prices fell sharply. I think the low that futures on Brent hit was about 91.70 or so. But we're back at about 100 plus, around 100 plus. Now, President Trump essentially saying that the Strait of Hormuz may be jointly controlled by the US and Iran. I mean, listen in, and we'll sort of get in Jonathan to comment on this.
Be jointly controlled.
By whom?
Maybe me. Maybe me.
Not the United States.
Me and the Ayatollah, whoever the Ayatollah is, whoever the next Ayatollah. Look, and there'll also be a form of a very serious form of a regime change. Now, in all fairness, everybody's been killed from the regime. They're really starting off. There's automatically a regime change. But we're dealing with some people that I find to be very reasonable, very solid. The people within know who they are. They're very respected.
All right. We await clarity, but at least I think the takeaway is that he's hinting towards some kind of de-escalation. At least that is the hope. That said, let's get in Jonathan Barrett, CIO of ETO Markets, who joins us on the show. Hi, Jonathan. Good morning. Crude oil prices have pulled back from an Indian equity market perspective. That's good news. But what do you think? Is this pullback in crude oil prices short-lived? And what are you working with in terms of a range, say, in the next few months, given that there are some signs of de-escalation?
Yes, good morning. Look, I think you can never trust what President Trump says. On one hand, he's looking for de-escalation, and then on the other hand, he's sending more troops to the region. So it is a concern. We really don't understand the process to which he's following, particularly when Iran rebut what he's actually said, so that no negotiations are actually happening. Surely we'd love to see that to occur, but I think at the moment you can't really trust as to what he's actually saying with any relevance to the situation, because the markets did react to the commentary. The question is whether or not the markets see truth in the commentary that he's actually said.
So what are you working with in terms of levels, just for the near term?
Yeah, look, I think the good thing about the range now, and we do have a range, so I think that's important. When you look at Brent, I think you're 115 on the top side, and when you look at the downside, that's 100 or just below that, 91, 92, as we said. So that's an immediate range. I do like the markets to actually fill in gaps. So I do think that there's a little bit more pain to the top side to come until we can actually get clarity with what he said. So the good thing is that we have a range to which we can deal with. We're at the lower end of the range. So I think having longs in at this level is not too bad until we get some clarity. But mind you, you have to be right on your game, because the crude oil price can move around on a dime.
All right. So the upper end of the range is around $120?
115, I think you can probably say. And the downside's around that 91. I know it's wide, but we're getting a lot of volatility there, as we know, each day.
That'll be good, actually. If the upside is capped at around $115 per barrel, because on March 9th, we went all the way to around $120 per barrel mark. And from then, the equity markets have been fretting that actually things could really go out of hand. But $115 on the upside, I think it's not such a bad outcome. That said, let's talk about a couple of other asset classes. What about precious metals? I'm not sure whether or not you track that one. But, gold has pulled back 20%. You have silver that's pulled back big time, more than 35-40% thereabouts from the top. What are you making of precious metals and levels out there?
Yeah, look, I think the precious metal complex is very, very interesting at the moment. On one hand, you're having a stronger dollar, and that stronger dollar saw gold and silver under pressure. But on the other hand, we have those inflationary pressures now coming through or about to come through the economy, and that should see a restore of value back into gold. I think the interesting thing and what caused a lot of these equity markets to come under pressure were the economic cycle, the inflationary aspects as a result of the high energy prices filtering in and equities come under pressure. The data we've had from the States has all been data that hasn't had any of these new energy levels baked in. So the next round of data next month will be very interesting for the market because then we'll see the higher cost of energy actually filtering into these inflationary numbers. And a result of that, you'd have to be confirmed that they will be higher rather than lower. And at that stage, we might get a little bit more of a bout. When it comes to gold, still a store of value. Our view is the inflationary pressures will remain there and gold should continue to trend higher.
So you'll be a buyer at gold at these levels?
Absolutely. Buy a dip at this level. You do have a range for gold, and I think that's important to note. Like with any market, if you do have a range, it's good. We do have that low, which we had last night, which was, I think was around about that 4,120 odd. That is the lower end of the range. Immediate resistance is 4,500, and a break of that, then we could challenge the new highs. But we do have a range, and we're at the lower end of the range at the moment, so happy to be buying.
What about silver? It's not an asset for the faint-hearted. An asset that moves from around $35, $40 all the way to $120, and now it's back down to $67. Where is that one headed?
Look, I think if anything, once again, if you take the war out of the equation, the demand dynamics far outweigh a lot of other demand for commodities, and you have to go back to your old analysis as to the reasons why you bought silver. That analysis is still there. So when you look at the green economy and where we're going, then the demand for silver continues to be there. So I do think that dips once again on silver remain the way to go, and remain long silver if you can hold on to it and your trade is not leveraged. But I do think at the end of the day, silver is the better bet over gold.
All right. Jonathan, thank you very much for joining in. Crude ranged by gold and silver. Preference for silver over gold. Let's get in some 9-10 calls. Mitesh? All right, we've lost that connection. By the way, just need to highlight that there is some confidence coming back into Asia. The Korean markets are now up over 2%. Taiwan was down 0.5% when we started the show, and now the Taiwanese market is back in the green, and the Japanese market too is picking up pace. But let's talk about Asian Paints. That's a stock in focus. Mangalam joins in.
Well, the company's announced a 6 to 8% sort of price hike that has come in two phases from April 10th and April 21st. And this will be across their portfolio. The companies try to balance this to maximize, revenue as well as volumes and have limited impact on trade channels. And more importantly, a large part of this is on account of increasing geopolitical concerns and increasing raw material prices due to geopolitical concerns and packaging as well as logistics. All the other paint companies had announced 2 to 3% price hike already, with another one likely. Asian Paints has done with one across two phases, so that's a positive. Overnight decline in crude and, winds of de-escalation perhaps are tailwinds as well. So all these factors, given the stock that has corrected about 11% from the peak in this month itself because of higher crude prices, should bounce back today.
All right. Well, I think a couple of seconds to go for market open, and we have the rates which will start to come up. What do we have? 22,850, that's about 1.5% higher. The Nifty Bank is up about 1.6%. 52,200. You've got the small cap index, which is up about 1.7. The mid cap index, which is up as well. And there you go. So 1,300 stocks are higher, 200 stocks are lower. And this is starting on a strong, strong note. I mean, of course, now the thing to do is to hold on to these gains and protect these gains, defend these gains through the course of the day. That's the job. 22,888 on the Nifty to begin this session. Let's just look at what's coming up as far as the Nifty heat map, and then we will see where this is showing up the most. So Asian Paints, Shriram Finance, Titan, Indigo, Ultratech are some of the names which are starting in the green. There's one name, Power Grid, lone loser on the Nifty, which is starting in the red. But it's an absolutely green-looking screen with a healthy market breadth. It was too early. We're just sort of out of the gates right now. But I suspect yesterday it was 10-1 by close, declines to advances. It'd be somewhat on the other side this morning. Rima.
Well, Asian Paints is the big winner, 4% up on Asian Paints after the 6 to 8% price hike. Auto names are in top gear. The Nifty Auto Index itself is up close to about, I think, 2% now up on the Nifty Auto Index, with names like Tata Motors Vehicles, Eicher Motors, Bajaj Autos, passenger vehicles, CV, two-wheelers, all rising in trade today. Shriram Finance is now the big gainer. That's up 4%. This is a stock which had fallen nearly 20%. If you'd counted till yesterday's closing, it was down 18-19% from the start of the conflict. So Shriram Finance is coming in for some buying. You've got gains in defense names. BEL right on top, 2.5%. Geo Financial has got strength. Eternal seeing buying, that's up 2%. Titan up nearly 3%. Ultratech Cement, 2.5%. A couple of these pharmaceutical names in related healthcare. Dr. Reddy's, Apollo Hospital seeing buying. They're up 2.5%. IT is on the flattish side, but there is green. So TCS and Infosys are up 0.5%. Reliance Industries also holding on to the green line, a gain of 0.6%. Power Grid was up 1.5% yesterday. It was resilient in an otherwise very weak market, but today it's giving up some gains. So 3%, 300 points now up on the Nifty, 22,800.
Well, that's right. A few stocks actually that deserve special mention. Saman Capital volumes very, very high for the first couple of minutes. Remember, that's waiting by for the green signal from the regulators as well. The deal that was announced, stock has seen a sharp correction from 190 to around 130 rupees. That's going to be a stock actually to track from here on. So we'll keep an eye out on that. GMR Airports is up close to 3.5%. Massive volume on that particular name as well. And NOSIL as well for the first minute of trade. Volumes are extremely high on that name. So just keep an eye out at that one, up close to around 3% or thereabouts. On the flip side, Gujarat Alkali is, I don't know what's going on there. Volumes very, very high. For this month itself, it's up close to 25%. It's down close to around 4% as we speak. So some kind of profit taking is what we are seeing on that name in today's session itself. The Nifty still holding on to gains, in terms of number of stocks advancing. It's totally opposite from what we saw yesterday. You had just around 2 stocks that were advancing yesterday by the time we wound up. Today, you have just a single stock, which is Power Grid, which is in the red, 49 stocks in the green, and some of the stocks that pull back, they're seeing a fiercer bounce in trade. Case in point being Asian Paints, Bajaj Auto, as well as Shriram Finance. Prashant.
Okay, I think we got the first, solid kind of gains coming through. Shriram Finance, by the way, is an interesting stock to look at, right? I mean, I think yesterday hit about 880-ish or so, and it's back at about 912 at this point in time. So 35 odd rupees higher on Shriram Finance at this point. I think the open offer for Shriram Finance was about 840, and it got pretty close to it, within about 30 rupees of it. And now back above 900 once again. So 500,000 plus shares traded on Shriram Finance right now. Mark Matthews of Bank Julius Baer and Company is with us with what he's making of things. Mark, welcome back to the program. It's been a while. Thanks very much. And so much water under the bridge, or rather oil under the bridge. Actually, no oil under the bridge. But Mark, what's your prognosis of the situation? Is this going to be a prolonged shock for world markets? I was just looking at GDP growth forecasts from Goldman Sachs. Was what they've put out this morning. More cuts in the last 10 days to global growth forecasts. And India, perhaps, India is seeing, according to them, their own forecast is seeing one of the steepest cuts, GDP growth, 5.9 real. Mark, what's your sense?
Of course, this is a very fluid situation, but my sense is in the last few days that Donald Trump has become very clearly wanting to end the war. And if you don't mind, I'll quote from an article that was published in Axios early this morning by Barak Ravid, who's their go-to reporter on government leaks, which are usually authorized. So basically, he says that the Americans have been in touch with the Speaker of the Iranian Parliament, and the Iranians have been forthcoming, and the Americans want to move as well because they don't like what oil prices are doing and what the markets are doing, and they're working toward an in-person meeting, possibly later this week. And according to Trump, Iran is committed to not pursue nuclear weapons or to enrich uranium, hand over its existing stockpiles, be low-key on missiles, and open the Strait of Hormuz. So if I was in Iran's shoes, I would see it in one of two ways. On the one hand, I don't think they want to become another Ukraine. And at the beginning of the Ukraine war, the Ukrainians had tremendous success. There was a deal that they could have done with Russia. They chose not to, and the war is still grinding on 4 years later. And so I think the Iranians must recognize that Trump will reach a tipping point that he won't be able to come back from, and he will have to commit to this war long term. And if I was them, I wouldn't want to have him reach that tipping point. On the other hand, it's very clear they profoundly distrust him, and they will want a deal with ironclad guarantees that the Americans cannot renege. And that kind of deal would typically take a couple of weeks to negotiate. Apparently, once again, there's various media sources saying that Trump wants this deal by April 9th. So the situation's fluid, but I could see how both scenarios are possible. On the one hand, I think both would like to see this war stopped. Of course, almost everybody in the world wants to. On the other hand, can they actually, make a deal? If I look at the precedents for Donald Trump, I do see one precedent where, with the immigration issue, he started off strong, and then he unfortunately allowed the Department of Homeland Security to hire a whole bunch of basically rough people and they ended up being chaotic and a big mess. But when he saw that, he stopped it. He fired the Secretary of the Department of Homeland Security and purged about half of the field officers. So there is a precedent for him realizing that a mistake was made and stopping it in its tracks. And therefore, I want to say that I am hopeful. Market is clearly not hopeful because U.S. futures are down today. But I think there is a possibility they can come to some agreement.
No, market clearly is not convinced, skeptical, a lot of confusion, a lot of pushback. And that is also fair. But yeah, I mean, one step forward, two steps back, it's always going to be messy, right? Any kind of ceasefire in that sense. I mean, it's not going to be straight cut. No ceasefire works like that. We'll see if there is a ceasefire over the next few days. Mark, just a quick word on India, Mark. You'd been, over the last many years, quite bullish, and then you kind of turned a little sober in your views with regards to expectations. One of the hardest hit markets. I mean, even before this conflict began, the broader market had sold off. And what the conflict has done is that it's taken the large cap stocks down as well, some 13-14% from the all-time highs. So your view on India?
Yes. By the way, just to clarify, no ceasefire in the next few days. I think that April 9th is the deadline we should be looking at, which is a few weeks. But anyway, yes, I think what is notable about the Indian market is how the large caps
Mark, if I can just ask you, Mark, sorry, what is April 9th? I mean, what's
that is the deadline that Trump is apparently set to have a deal with Iran.
Okay, I thought the deadline was. I see. I
missed it.
But there were some reports overnight that
keeps moving.
That from Bazaar side.
Yes, I know what you mean. Initially, it was supposed to be this morning, and then it was supposed to be 5 days. Yeah. If the sources, which are coming from Israel, are basically saying that he sees the possibility of doing a deal, but he realizes it can't be done in a few days. So he's given it until April 9th. But with India, I wanted to say that I am interested in how the mid and small caps have held up relatively well. To me, that shows that there aren't really many sellers on the domestic side. The sellers, I'm amazed, frankly, are still coming from the foreign side. But where we've been hurt overseas is primarily in the rupee. And I I confess that I didn't expect the rupee to keep going down so much. I hope it isn't some kind of unstated policy to allow a devaluation to make Indian exports more competitive. I've heard that, people speculating as such, because then we wouldn't really know where the floor is. But if I think that the chances are better that the oil market will normalize, and in fact, as a house, we do believe that. Our oil price forecast 3 months from now is in the high 60s. So it's lower than where it is today. Then I would expect India to be one of the biggest recovery stories from that, because it's obviously gone down more, and so is its currency, on the back of the high oil price.
Mark, hi. Morning. This is Rima here. You know, what's not getting talked about a lot on account of the war is the private credit situation in the US. And there have been multiple firms, the latest being Apollo Private Credit, which has halted redemptions. How worrying is the situation? Have you all done any kind of analysis? And is that something which is going to hurt once we stop talking about the war?
Yes, we have done analysis, and our analysis leads us to conclude that the market is exaggerating the systemic possibilities, which we don't see. We think that really for this to be a systemic issue, you need a recession, and we're not forecasting one this year in the United States. No doubt there are some skeletons in closets in the private credit markets because they have grown so very quickly. But I don't think it means there's a skeleton in every closet. And the way the market is being priced now, I think assumes a much bigger problem that exists. These funds are being gated because there's a rush to get out. And the problem is that, you know, when you can't get out, then everybody wants to get out. But they do that so that they don't have to become forced sellers of assets, and they can do it in an orderly manner. And by the way, they're not breaking any rules. These were in the covenants that these funds set up. So I think that's one where we have a strong view that the headlines are exaggerating the nature of the problem, and we think prices are also.
All right. You know, just trying to look beyond the fog of war whenever it comes to an end. The trades which were doing very well were these AI trades. So when you look at the emerging market basket, it was Korea, Taiwan, the semiconductors there, which were the favored stocks. Again, once the war comes to an end, will it go back to that AI trade, or will there be a churn in the way investors look at emerging markets?
I think there will be a change, and the whole AI trade kind of peaked out in the second half of last year in America, and then laterally, beginning of this year, in the hardware space here in Asia. But in a nutshell, I think the market has shifted from viewing AI as this infinite possibility and wonderful to somewhat dangerous. And of course, there's a social aspect of that in terms of the implications for taking away jobs, particularly from young graduates, that's been widely discussed, but also the tremendous spending that the hyperscalers are doing in hardware, which arguably has quite a short shelf life, has decreased their free cash flows. And the whole thing that made U.S. technology so attractive was their incredibly strong free cash flows, which they used in part to buy back shares and pay out dividends. So the free cash flow as a percent of income has literally collapsed among the hyperscalers. Now, we think that the CapEx is going to peak in the second half of this year. And when it does, people will shift away from looking at this decline in free cash flow because it should stop declining when the CapEx stops, when the CapEx peaks. And they'll go back to looking at valuations. And there I can say that, amazing but true, the big technology companies in America, excluding one or two like Palantir or Tesla, are actually not expensive. They are in the 20s PE rise, And yet they still have, very strong double-digit growth. And so, even NVIDIA is now down to trading at about 23 times 12 months forward earnings. And the rest of them are, sort of between 20 to the high 20s. So when we do go back to looking at the valuations, I think we'll find that it is a compelling story, but I don't expect that to happen until late this year.
And you expect the FIs to come back to India? The currency seems to be exaggerated on the downside, which makes risk reward a little bit more favorable. FIs underweight on India. Maybe the rupee has extended itself on the downside, and hopefully earnings growth comes back. Do you expect the FI flows to turn?
Well, everything you say, I agree with, Nigel. And so intuitively, one would expect that. I've never really understood why there was so much selling of India. I mean, the only thing I could think of was that, number one, it had become rather expensive sort of 2 years ago. We've cooled off since then. Actually, it's not really an expensive market anymore. The forward PE ratio is below 20 times. And I know some people who've just been perennial India bears, friends of mine, fund managers, who, by the way, are Indian. So they just always felt it was too expensive. I'm noticing that they are now starting to get interested in it, these long-term bears on India, because they're seeing, the currency's gone down so much, and the stock market is re-rated to, I wouldn't call it a cheap level, but it's not expensive anymore. So I definitely think there is potential for the market to turn around based on its fundamentals.
Thank you very much for joining in, Mark. Always a pleasure chatting with you. Let's invite the management now of NLC India on the show. Prasanna Kumar Motupalli, Chairman and Managing Director of the company, is now joining in. The three chat points that we'd like to discuss with him: one, power supply demand trends, the operational timelines for the key plants, and the IPO timeline for the renewable energy arm. Thank you very much, sir, for joining in. We just concluded our inaugural Bharat Electricity Summit 2026. And the plans are grand. We planned, at least for India, we're planning to double the total installed power capacity. And this is driven by a near 30% surge in demand. So can you tell us, for NLC India, what is going to be your capex for this year, next year? For 5 years, you've shared a number of, I think, 1.17 lakh crore. Is there going to be a change in that? So just take us through the big picture first in terms of capex for you. Sir, I think you're in mute.
Since the beginning, NLC India always balance the conventional capacity addition and renewable capacity addition. We believe that going forward, both are required for the growth story of the country. So at present, we are having around 6.8 gigawatt of total power generating capacity, and we want to take it to 20 gigawatt by 2030. And at present, we are having 1.7 gigawatt of renewables, and we want to take it to 10 gigawatt, almost 7 times by 2030. And for all these things, the capex requirement is around 1.25 lakh crore in next 4 to 5 years. And also in the mining capacity, also from the current capacity of 50 million metric ton, we want to take almost double it by 2030 to almost 100 million metric ton per year. So in all the three areas, the active works are in progress. The projects are going on as per the program, and we are hopeful that we will be completing these projects within the timeline.
All right. Hi, sir. Good morning. Good to hear your thoughts as always. Well, for a business as yours, the targeted regulated equity is one of the most important aspects from an investor perspective. What is that likely to be, say, in the coming year, FY27?
Actually, by 2030, we are targeting regulated equity of around 19,000 crores. And by 27, our now the Ghatampur third unit also gets added. So it will be increased by around 1,200 crores. But our target is to take the regulated equity to around 19,000 crores by 2030.
And right now, what is it at? 1,200 crores gets added next year. But currently, what is it at?
Yes.
Right now, sir, what is the regulated equity of the company?
Our regulated equity right now is around 9,200 crores, and that will be increased by around 12.
Got it, sir. All right. The other big expectation from the street is the renewable vertical IPO. I've been pushing you the last few times, and I think the last time you told us that hopefully in the first half of the next fiscal. Do you think that's when we see the IPO coming in terms of your renewable business? And give us a sneak peek into what could the potential size be.
We formed a 100% owned subsidiary for the asset monetization, and all the activities are in fast progress. We got the exemption from the government for the asset transfer, tax exemption for asset transfer in shortest possible time. And there was approval from the cabinet also for the 7,000 crores investment. And we are targeting to bring IPO by around September or October of the current financial year. And although the total value is around 7,000 crores, but it will not be in at a stretch. We will be going for a percentage around 25 to 30%. That is not yet decided. And that is expected by around September, October of this current financial year.
Okay. And you're looking to sell 25 to 30%?
Yes.
Okay. And no fresh issue over here?
No, madam.
All right. And the size is 7,000 crore rupees?
7,000 crore is total. Out of that, we will go for around 25% to 30%.
Oh.
Got that. So one worry has been that despite higher operational capacity in FY26, your revenue and profit growth has not been moving in step with the growth in capacity. Can you explain that, and how is demand for you? What is the growth rate that we're seeing?
In the initial first half of the financial year and in this quarter three also, there was the reduction in the power demand because of the favorable weather conditions. So because of that, there was some shortfall in the generation. But in the recent past, the power demand has increased, and going forward also, we are expecting good power demand. So the financial performance and operational performance will be better than the last financial year. We are confident about that.
Got that. And sir, on account of the war, has there been any impact, direct, indirect, on your fuel costs?
Madam, most of our thermal power stations are pithead power stations with captive mines. So we don't see any effect on the fuel supplies or costing. And even our coal-based power stations are also having sufficient quantity of coal, more than 30 to 40 days. So we don't see any effect of the war on the operations.
Okay, all right. So one quick question with regard to this renewable energy. What is the plan? I think 8 gigawatt is what you were targeting, right? In terms of capacity. Could you help us out with the plan out there? What is it at? What is the capex you'll incur? And by when do you get to that 8 gigawatt?
We started the year with around 1.4 gigawatt installed capacity. And now we added around 350 megawatt in the current financial year. Now we are at around 1.7 gigawatt. And our target is to take this to 10 gigawatt. Almost 6 to 7 times we want to increase this capacity to 10 gigawatt.
Okay.
So to reach this 10 gigawatt capacity, we formed joint ventures with the government of Assam, government of Rajasthan, and we are in the process of forming joint venture with Maharashtra and Odisha. So with all these things, we will be able to adding more than 10 gigawatt capacity. Already around 4.5 gigawatt works are in progress. In Rajasthan, 810 megawatt. In Gujarat, 600 megawatt. Howrah, that is about to be operationalized. So overall, around 4.5 gigawatt are in pipeline, and almost the entire 10 gigawatt is under planning stage. So our requirement, the capex requirement for this capacity is around 25,000 to 30,000 crores. And we are hopeful to manage this through our whatever IPO we are planning, as well as the internal resources.
Okay, just a quick word, sir, in terms of the total quantum of coal that you produce. What is it on an annual basis?
Our coal production target is 20 million metric ton.
20 million. And how much is sold, sir, in the open market? How much is sold in the open market?
Last financial year till now, this financial year till now, we sold 8.5 million in the market with a revenue of 1,382 crores.
And some part of this produce that you have, as you said, 20 million is what you'll mine. I think you'll end up the year by selling in the open market around, what should it be, around 11, 12 million tons?
No, around 9 to 10 million metric ton.
Okay, 10 million tons. Out of the 10 million tons, how much is sold by the e-auction route?
No, I'm talking about whatever figure I am giving, that is through e-auction route one only.
But the entire amount
and
goes
the other than this, we are giving to NTPC, we are giving to DBC, and we are sending to our own captive plant in Tuticorin.
Okay.
So the e-auction coal figure is only that's what I was telling, 8.5 to 9 million metric ton.
Interesting. And how much have prices moved up, sir, on e-auction? The reason I ask you is because global prices of coal had moved up substantially. And there should be some kind of rub-off in India. May not be this quarter, maybe in the coming month or so, but have you observed any kind of change?
Yes, actually, this financial year, in the initial quarters of this financial year, there is comparatively lesser demand for for coal. That's why the prices were also on lower side. But now, with the growing demand and growing demand for power, the prices are gradually increasing in the e-auction route also.
Want to quantify it, sir? Because demand was very weak. But in the last 1 month, has there been any notable price move, 5%, 2%, 10%? If you could give us a rough number on e-auction realizations?
So e-auction, actually, there are a number of tranches of e-auction. So exactly percentage-wise, we cannot tell. But it is in upward trend, and it is expected that it will further go upward.
Okay, fair estimates, sir. Always a pleasure talking to you. Thanks a lot for giving us an insight into business, your IPO plans, as well as a brief insight on the coal business as well. For the time being, though, we slip into a short break. On the other side, we have the management of Titagarh Rail Systems who will be joining in to discuss on their business outlook and the road ahead for the company. Welcome back. This is Corporate Radar, and you're tuned into CNBC-TV18. Well, the markets have come off a little bit from the top. ITC is the stock that slipped considerably. I think from the time we started off, that's down close to around 2% from the day's high. Coal India as well, after being a relative outperformer, this month the stock is actually up 3.5% while the markets have corrected. That's come in for some profit taking. So both those two have moved lower. But let's focus on the oil and gas space. CLSA has maintained its high conviction outperform rating on ONGC, while Goldman Sachs says the risk reward has turned less compelling for oil marketing companies. Sonal joins us with a quick analysis on all those companies. Sonal?
Thank you for that. Well, interesting note from CLSA where they've raised target price on ONGC to 415, reiterated their high conviction on the stock, and they say this has been the worst performing exploration and production stock since the war began, as investors feared a new windfall tax on higher realization. But this fear of new windfall tax, it is because of what happened back in July 2022, where we did see additional taxes because of high crude oil prices. However, there has been a new law. We've been talking about it since since the time crude prices have been higher, which does not allow government to impose windfall taxes on higher realization for these exploration companies. And now that stock is pricing Brent at $63 per barrel, they believe there's a 65% upside in a scenario where they're using $90 a barrel. So they think it is valuing itself at a lower level, and that's why they think a 15% rise in gas production in the next 3 to 4 months and over 50% jump in new well gas prices will be the other trigger, apart from higher oil realizations as well. They are raising FY27 Brent to $89 per barrel, increasing EPS by 34% on the stock, and for FY28 it is lifted to $82 per barrel, which would mean a 14% rise in EPS from current levels. So they are quite positive on this name. Oil marketing companies, third downgrade coming in, target price cutting coming in. We had HSBC, Kotak Institutional Equities, and now it is coming from Goldman Sachs. They say risk reward has turned less compelling. Marketing margins, we have been telling how they've turned negative for petrol and diesel, and they're impacted because they're not able to pass it on to consumers at retail level. And crude and product prices at gas stations also remain at the current levels despite higher raw material prices. Goldman Sachs has downgraded HPCL to a neutral from a buy, target cut to 310. For BPCL, the same downgrade in ratings, target cut to 340, and for IOC, the target has been cut to 110. However, for Reliance, they have increased the target to 1,910. They maintain their buy. And for ONGC, they have a sell rating and the target price is 245. So different view coming in from CLSA as far as ONGC is concerned.
Thank you very much for that. A couple of other stocks are reacting to brokerages. Pull up Apollo Hospitals, that's a big mover. Citi has a buy call, target price 9,600. Citi has basically added Apollo Hospitals to their Pan-Asia focused buy list because they're saying their hospital business is resilient. Their pharmacy business, has profitability inside the digital profitability, and valuations are also below long-term averages. So Apollo Hospitals is a big mover, and Titan is the other one, where CLSA has an outperform call and today raised the target price further to 4,996. But Titagarh Rail Systems and BHEL have planned a JV for maintenance of Vande Bharat sleeper trains. This is a stock which is down 30% so far in 2026. Umesh Chaudhary, Vice Chairman, Managing Director of Titagarh Rail Systems, is now joining in. Thank you very much for joining in. Now, this maintenance JV with BHEL for Vande Bharat is a little different from the usual business of manufacturing. So I get that it makes sense as an add-on business, but what is the capital allocation? What are you hoping to achieve? What are the terms of your JV? What is the revenue accretion going to look like?
Yeah, so good morning. This JV is actually a part of the larger contract that we, along with BHEL, had signed with the Indian Railways to manufacture, supply, and maintain 80 Vande Bharat trains. That's a total of 1,280 coaches over a period of the next 4 or 5 years. And then we have to maintain these trains for the next 35 years. So the total contract value, which was about 24,000 crores, out of that about 10,000 crore was the supply and 14,000 crores on net present value was the maintenance contract over the next 35 years. And this maintenance contract could have been done by the consortium or by a joint venture to be constituted by a consortium. So both us and BHEL have decided to form this joint venture, which is a 50-50 joint venture, which will actually take up that part of the contract which has been awarded to us.
Got that. So a 14,000 crore opportunity over the next 30-35 years for BHEL and Titagarh Rail, 50-50. Is that correct?
That's right. So it's 14,000 crore is not the opportunity. That's the contract. That's the contract which we have already signed on a net present value. So this will get adjusted by the price variation that will happen over the period of time based on the wholesale price index. So that's the contract that we have.
Okay. And how is this going to accrue to you? Will it be equally divided every year? Or as the trains age, there will be more work required in terms of maintaining it, and therefore the amount that you get towards the end will be more on an annual basis, not adjusting for inflation. But take us through how the revenue accretion for you will come, and what are the kind of margins you will enjoy on this?
So the revenue on this is approximately 4% of the value of the train. So we sell each train for about 120 crores. And 4%, about 4% of the value of the train is given to us every year per train for the AMC. That's how the value will accrue in this joint venture. So once we have supplied all the 80 trains, then the entire 80 train portfolio will be under the AMC coverage, which will be serviced by the JV. The entire 80 trains would get supplied by about 2030 or 2031 thereabouts, and thereafter the entire revenue starts accruing. Maintenance is a more profitable business than OEM. Worldwide, AMC is a more profitable business. So we are expecting that the margin profile in supply of rolling stock is anything between 12 to 15%. In maintenance, it is better than that.
Could you give a number for the margins on maintenance?
It would be premature to give a number, but it would be definitely much better than the OEM margins.
And when would the revenue accretion start? You said it's dependent on the supply of trains once you've supplied the entire lot.
Not the entire lot. It is actually on a phased-wise manner. So when we supply the first train, let's say the first few trains that will get supplied in FY27, the revenue of that will start getting accrued from FY28 itself. So it is on supply of the trains, the revenue starts getting accrued.
So have you all modeled?
Revenue, as you had asked.
So you all would know, right, how many trains you're planning to supply in FY27, how many in FY28. So just going by that modeling, what is the AMC revenue we should expect for Titagarh Rail, FY27, 28, 29, 30?
So we are expecting to supply about 3 or 4 trains in the FY27, and then next year it goes, so that it's already in public domain. We had also given it in our strategic plan, the delivery schedule that is there for the contract. The first year we have to supply about 3 or 4 trains, which is in FY27, and thereafter it goes up to about 12 trains or 16 trains, and then 24 trains per year. And the entire 80 trains will get completed by FY31.
All right, I'm Chaudhary. Good to see you in, sir. Titagarh Naval, they have given a corporate guarantee to bid for some ONGC tenders. Could you tell us what is the quantum of this? What is the size of opportunity? And by when do you expect to see some kind of outcome from this particular, deal that you're doing?
So as we had discussed earlier, we have, we were in the shipbuilding business, which we have now demerged and put into a 100% owned subsidiary, which is carrying out the shipbuilding business. And, shipbuilding as a sector is an extremely promising sector. And this is a tender which was floated by ONGC to procure bulk carrying specialized vessels. As per newspaper reports, there are about 5 or 6 companies that have bid for it. So we expect that the finalization should happen in a few months. And we would be very keen to take this forward.
Okay. Just one final word then. On account of the war in West Asia, has there been any impact on your business? And if yes, could you explain how?
I really don't think that any sector or any individual is really not impacted by this unfortunate war. There have been problems in terms of getting consumables, gases for our welding and all of that. We are managing. There have been impacts that we've had to face on various production cycles. Of course, shipment cycles are getting disturbed. So, while this is something which is impacting us, it's not something which has come down like a ton of bricks on our sector as of now. But we are watching carefully what happens and how things unfold.
To what extent has production been hampered so far in the last 24 days?
It is sporadic. There have been a few days where production has actually come to a grinding halt. I would not say it has come to a complete stoppage over the last 24, 25 days, but yes, it has been impacted on a few days because of the supply chain constraints.
Is it possible, sir, to put a number to the production loss so far?
No, we'll not be able to give a number to that, but we are trying to maintain it by way of trying to work on weekends and so on and so forth. So at this point of time, we'll not be able to give a exact number to it, but definitely we'll come back once we have complete clarity. And we are only just about a week away from the end of the quarter or the month, so we'll definitely come back with numbers there.
Outside of this particular impact on your business, how has the quarter been? What are the key highlights of Q4?
Quarter has been pretty much as per expectations. Both our businesses, the passenger rail system and the freight rail systems, is going on as we had envisaged. Apart from this, the month of March for wagon production primarily, the supply chain constraints which have impacted slightly. But apart from that, it's pretty much as per expectations.
All right, very quickly, sir, you had indicated that the trial production of wheel sets, I think, would start in this month. Has that happened?
It is going to be starting either this or next month. So that's what I had indicated. And we are well on track that we will start the trial production by April.
And what is the capacity, wheel set capacity, and how do you scale that up?
The total capacity of the joint venture, this is a joint venture, as you're aware, between us and Ramakrishna Forging, and the total capacity that is there is about 220,000 wheels per year, which will be in two phases. So the first phase will give us about between 80 to 100,000 wheels, which is the one that will come into production now. And of course, the normal ramping up cycle that is required will be taken. But we'll start the trial production in April. So we have a contract, an offtake agreement of about 80,000 wheels per year for the next 20 years from the railways. That, in any case, will be catered to by the first phase. And then the expanded capacity will also take care of our or export or other requirements.
Okay, all right. Thank you very much for that. Appreciate your time here and good speaking with you. That's Titagarh Rail Systems with Perspective. By the way, I just want to highlight what's happening in the broader market. NOSIL, I just want to put that up. NOSIL was up 10% yesterday. It's up another 10% today. And that's a pretty large move. I mean, I think it was $140 day before yesterday's close. And it's at 176 right now. So that is NOSIL. Humongous volumes on this one. The high, by the way, it was... $330 in August of 2024. So it's done pretty poorly since then. But last 2 days, very, very good. JBM Auto is another one which is coming up with, some gusto. It's the second largest volume-led gainer right now. And Tejas Networks, right? I mean, it's the low was about 399, back at about 430 or so. But the recent high was about 530. So this is again a completely bombed out name, but from the lows it come up very, very sharply from 300-ish levels to about 550, sold off to under 400 and back at about 431 now. What else? I mean, a lot of these silver ETFs are jumping. Silver B is about 5.5% higher. And actually across the board, between 5 and 6% gains. There is HBL Engine, which is up about 5%. The only reason I'm mentioning this small company, but it's got very large volumes for now. Acuitas is up about 7.5%. Tata Motors commercial vehicle business is up 5%. And there is Electra, which is jumping about 7% higher as well. About 1,100 now from 5 or 6 days back. Stock was about 890 odd rupees or so. So, there is a fair bit which is happening. Aeroflex, for example, is another one which is coming up about 6% or so. So from about 190-ish levels to about 240 in short order on this one. So this is the bulk of where volumes and price action is coinciding. InterGlobe Aviation is another one. I mean, fell under 4,000 rupees yesterday. Is there any relief? Sudarshan is here with what he's got in this one. So over to you.
So today it's one of the top nifty gainers, seeing a relief rally as crude has come off yesterday's high of around $120 per barrel, currently trading around $104 per barrel. But again, it's off lows, overnight lows that we had seen around $96 to $97. And if there is any further de-escalation in this war, that will help if there is any reducing the input cost increase. So what are some of the major input costs? The first one is ATF, which forms almost 40% of the airline cost. And recently, government has also announced the increase in the ATF price from rupees 5,215 per kiloliter. That was the increase that was announced on 1st March. But oil marketing companies have not fully passed on the global benchmarks yet. So next increase that will come on April 1st will be watched out very closely. Second is aircraft leases. That also has seen an increase, and it forms 15 to 18% of total cost. And the increase mainly because the rupee depreciation that we have been seeing over the last few weeks, and currently rupee is hovering around 94 against dollar. Third is war risk insurance. Earlier this cost was negligible, but now it has become a mandatory line item that will also going to increase the cost. And last one is crew cost, or say longer routes. That forms almost 10% of total cost, and because of this war, rerouting has increased, and it has added 1 to 3 hours on mainly Gulf and Europe routes. So over the last few weeks, we have seen a major increase in the cost as far as the airlines are concerned. That was the reason stocks like Indigo, SpiceJet, all these stocks have been under pressure. And today, because of crude coming off highs, it's seeing a relief rally.
Thank you very much for that. Kotak Mahindra Bank is another one holding up quite smartly. Nomura today has upgraded Kotak Mahindra Bank to a buy with a target price of 445. They also like Axis Bank and ICICI Bank in the private sector banks. HDFC Bank should also come up for you on your screen. It's gotten hit hard, 12% decline in the last 4 trading sessions. And this morning, HDFC Bank has opened up with a gain of 1%. Chandan Taparia of Motilal Oswal Financial Services is now joining in. Chandan, 200-point gain on the Nifty. We started off with a 350-point up move, but now it's holding up smartly, nice gains, but not quite the morning surge.
Yeah, good morning, Rima. Thanks for having me. So the structure of the market is negative. Index has been making lower top, lower bottom on the weekly chart from last 6 to 7 weeks. We have noticed that every bounce is being sold in this entire sequence of lower top, lower bottom. And I believe the market has to surpass the hurdle. Then only the stability will be back. Otherwise, the meaningful bounce is being sold. So I believe till Nifty doesn't surpass 23,150, 23,333, the medium term and the short term trend could remain negative to retest the recent low near 22,500 to 22,200 marks. So as of now, the weakness persists. Market needs to surpass the hurdle. Then only the stability will be back. Otherwise, better to be with the immediate trend that is negative. India VIX is near 25 marks. Till VIX doesn't cool down, we may see the volatile swings, but trend is negative, so upside should be kept as of now. Now, looking at the Bank Nifty index, it has been underperforming the broader market now. The weakness remains intact, has been making lower top, lower bottom. However, it recovered by 700, 800 points from lower levels, but hurdles are not being surpassed. So till Bank Nifty remains below 52,500, upside could be kept to revisit the recent low near 51,500 to 51,100 marks. So in both the indices, as of now, the structure is weak, but bounce could be sold. So we need to play the stance accordingly. But at the same time, as already we have seen selling pressure and most of the indices going into the oversold. So position sizing, one can reduce slightly looking at the entire market scenario and the higher VIX level.
Yeah, no, absolutely. Stocks, Chandan, hi, morning, quickly. What would you recommend?
Yeah, Prashant. So I'll mix with buy and sell both. First, that is buy on Apollo Hospital. Comparatively, need to focus on the defense and defensive counter. So Apollo Hospital recently corrected from 78.50 to 7,100 levels, but now getting an early sign of negating of lower top, lower bottom. In fact, the mechanical indicator like RSI is getting some crossover, some short covering is visible in the counter. So looking for a surge in the stock towards 76.50, one can buy with support of 7,200 level. Second trading idea, that is Cummins. Major trend is range bound comparatively, holding above is rising support trend line with the hold near 50-day mark. A small follow-up could negate the lower top, lower bottom on the weekly chart. And counter is comparatively resilience at the time of market decline. So can see some recovery with support of 44.80. One can look for an upside target towards 47.80. Negative ideas, that is sell on Muthoot Finance. Weakest counter has been making lower top, lower bottom. 2 weeks back, it witnessed recovery, but that was sold, forming the negative price pattern. So weakness could continue. One can sell with a stop loss of 31.20. It can go down towards 2,900 levels.
Okay, all right. Chandan, we leave it there. Thank you very much for that. We take a quick commercial break here. Well, we come back and swing back to commodities and what's top of mind there. Manisha is here with exactly that. Stay tuned.
Welcome back. Some gains are fizzling out. The Nifty's dropped below 22,700, now up less than 200 points. But let's talk about commodities. Manisha is now joining in with her take on crude oil prices and natural gas.
Thank you so much for that. Well, yes, we're trading 4% on the higher side for the crude oil prices in the Asian markets right now. That's exactly how we shut New York in the markets yesterday, and that's how Asia has opened, very, very steady there. And this is after that whole big move that we saw in the markets come in yesterday, where from a near 8% plus to a down minus 10% is how the crude prices really reacted. This was after the US president postponed attacks on Iran energy infrastructure for 5 days. Iran, in the meanwhile, has denied any talks to end the conflict. The US president's statement, they said, is seen as an effort to support or stabilize the oil prices and the other markets as well. The street also is looking at Iran launching new attacks on the US targets. Israel, in the meanwhile, has continued to attack or look at a strike against Iran. In the meanwhile, we also have seen Saudi Arabia and UAE wanting to join this, and Saudi Arabia agreeing to give the US military access to its King Fahd Air Base. So markets are looking at more concerns rising into the space, and is the reason that the 3-digit crude oil prices have just continued to sustain within there. Add to that the fact that you're also looking at the US oil August futures trading at $80 a barrel versus the spot, which is trading at $92 a barrel here. So what we are looking at in case of crude oil prices is a big backwardation. Well, actually, when you look at end of December, the December futures, that is trading at around $78 a barrel. So we're looking at a big backwardation on every future month forward there. The global oil prices, in the meanwhile, have not climbed enough to cause demand destruction, is the statement coming in from the US Energy Secretary as well. There have been various statements coming in into the markets there, but adding to this reaction has been the explosion at the Valero Refinery in Texas, US. Now, remember, this is one of the biggest ones in the US markets, and with what we've seen happen in the Middle East, in this adding to that, you should be looking at perhaps premium continuing in case of the crude oil prices there. Valero Refinery, by the way, processes nearly 435,000 barrels per day into gasoline, diesel and jet fuel as well. So this is a bit of a setback that we're looking at in sense of refining numbers coming in from that refinery therein. It's not just crude oil. Take a look at the natural gas prices, and the supply from West Asia continues to collapse because of Strait of Hormuz, and that has led to the global LNG exports declining to nearly 6-month lows there. Markets also are looking at Qatar Energy, which says that the damage on the Ras Al Khaimah LNG complex will cost them $20 billion per annum there, and it would take nearly 5 years to repair. So that is your gas impact as well coming in from one of the major gas fields in the world there. The Europe gas storage also has continued to decline. Remember, the winter is just about ended, and it's only 29% full, and it's 10% lower than where we were in the previous year. And with the kind of concerns that we're looking at, I'm assuming you were looking at higher prices in oil and gas for some time to come. Take a look at what we've done in sense of prices on a month-on-month and YTD basis. So there you have the US crude prices up by 59% vis-a-vis 70% of gains in Brent, because Brent is where all the Middle East impact seems to be coming in from. On the yearly basis, we are up by 40% for US crude and 47% up for the Brent prices there. It is the Urals, which is the Russian crude prices. This has gained 107% in year this time. It's up by nearly 78% in the last 1 month as well. The gasoline prices have continued to gain 80% up in this year till time. That is heating oil for you, more than 100% of gains coming in for that one. Even coal, for that matter, has gained up by 31% in this year, 20% of those gains coming in the matter of last 1 month itself. And this is ethanol futures from the US markets. Well, as you can see, everything that comes in the category of energy has been gaining. So 14% up on a month on that, and 25% up for this year as well. So energy continues to gain much higher.
All right. Thanks very much, Manisha. For that, that's Commodities in Focus. We take a break. Our special segment is the economy. Latha discusses the impact of the Iran war on US macros with David Miracle of Goldman Sachs on the other side. Stay tuned.